So thinking of buying a new home this year, but you really don't want to sell your current home? Well, this is exactly what this video is all about. I will show you how you can turn your primary home into a rental property, let tenant cover your mortgage for you, and still qualify to buy the next home. If you do this right, you can avoid $100,000 mistake that most homeowners has made. And if you do this wrong, you will watch other people build wealth through real estate while you are drowning in monthly mortgage payments. I am Wale Lawal. I'm a Texas-based real estate broker based in Houston, Texas. I currently own over 30 rental properties, and I've helped over 400 people just like you to make a decision of either selling their home or keeping it as a rental property. So I am talking from experience, not from theory. And in addition to that, I have personally used this strategy myself to buy another property, and I've walked dozens of people through this strategy I'm about to walk you through. So today I'm breaking down the exact playbook so you can execute without costly mistakes that many people has made. Let's assume you have a house that is worth $400,000 and your mortgage balance is $250,000. Here is what is at stake for you. If you sell your home right now, you probably will walk away with around $124,000 in cash after you pay the agent commission and all the closing costs. But if you decide to keep the property over the next 5 years, that same house will have increased in value with at least $97,000 at 4% annual appreciation. You will also get around $800 in monthly cash flow. This is pure cash flow coming to your bank account every single month, which equals to $48,000 over that 5 years. You're going to also get a huge tax savings, 4% annual property appreciation, mortgage paid down by your tenant, among other benefits of keeping a property on for a long term. And that is $145,000 different from only one decision. And I'm not even accounting for all the tax benefits that real estate has to offer you if you keep it for long term. So here's why you may want to keep your property for a few more years before you decide to sell it. One is the cash flow. Your tenant cover your mortgage for you every single month while you are building wealth. There's a lot of tax write-off when you own rental property. I'm talking about your mortgage interest rate, IRS depreciation, and all the repairs and expenses you incur on your property are all tax deductible. The number 3 major benefit is the leverage. Lenders allow up to 75% of your projected rental income to help you qualify for your next home you want to buy. And that is huge. Rental income isn't just money in your pocket, it is your ticket to buying your next property and build wealth faster with less risk. Now, most people always mess this up because they just don't know how the process actually works. You can't just grab any tenant, throw them in your house and hope for the best. There is a right way of doing it and there is a wrong way of doing it. So let me show you the exact 6 steps that you can follow today to save you all these mistakes I've seen happening every single day. So here's exactly how to do it. Step 1, you want to get your home rent ready. I'm talking about painting it, do a deep cleaning, replace any wall flooring, replace anything that needs to be replaced in the house, and make it move-in ready but not perfect because it's going to be a rental property. The number 2 is that you want to pick your rental strategy. There's so many ways to rent your property out. You can do a long-term lease, which means somebody will live in your house for at least 12 months. You can do a short-term rental like your Airbnb, Furnish Finder, VRBO, or even medium-term rental as well. Now, one thing you have to consider is that long-term rental is more stable and more predictable, and it's almost like a guaranteed paycheck every single month. Short-term rental, you're going to make about 20 to 30% more money every single month, but it is super unpredictable and can be a lot of stress for you if you don't have the time. The number 3 step is you want to now update your rental insurance. When you are living there, you are getting homeowner insurance. You want to switch to landlord policy or rental dwelling policy. If you skip this step, this could mean that insurance company could deny your claim when you have any insurance claim. And the step 4 is marketing and leases. You want to decide how do you want to even market this property. You can hire an agent to help you list your property through MLS. Most agents that work with investors are very familiar with helping you to list your property within 30 days. Or if you choose not to do that, you can actually do it by yourself. You can list your property on Zillow. You can also use Hemlin.com. I personally use Hemlin.com. You can use Apartment.com. You can now use it to screen your tenants and pretty much do their background check, their credit history, their income verification, and also their eviction history. And again, Emlyn.com can do this for you easily. You can also use TransUnion Smart Move to get this done for free because the tenants are always responsible for that background check payment. It usually costs about $40. And personally, I've been using Emlyn to do all these things I just walk you through since 2022, so I do recommend it. You can see the link to sign up in the description below. Now, step number 5 is that you want to decide on property management. Do you want to self-manage or you want to hire a property manager. If you hire a property manager, they will charge you between 8 to 10% of your monthly rent you are collecting from that property. Or you can also use a software like Hemlin, Avail, Buildium to self-manage your property by yourself. You can even use Rent Ready as well. Here, take me to my number 6 step that you have to follow if you really want to do this the right way. It is the bookkeeping and protection. You want to make sure you document everything. You want to track every single dollars you spend on your property. You can easily use QuickBook, or you can use a very, property management software that has bookkeeping functionality built in. Hemlin, Avail, Apartment.com kind of have some elements of bookkeeping that you can easily use without you paying for extra software. Now, if you want to even be super simple, you can easily use a simple Excel spreadsheet that you can download online, or you can even make one by yourself. Now, you want to consider an LLC for liability protection purpose if you think of buying more than 2 or 3 properties. But if you only have 2 to 3 properties, you really don't need an LLC. You can always create an LLC in the future if you expand your portfolio to that point. And my simple rule of thumb is that if you have a property that is less than $1 million, you really don't need an LLC. And again, this is my personal opinion. This is not an advice. So if you do this right, your whole home can actually become a business and an asset, not a liability for you. But here is where it actually gets very interesting. Most people will actually stop here. After they rent out their whole house, they will just stop and they don't think about anything else. The real wealth hack is actually what you'd purchase next. That is, your next house can actually open a lot of doors for you. Because if you buy smart, you can go from 1 property to 3, 4, or 5 rental property in as little as 1 year. Here is how you do it. So instead of you buying one single family home, right, you can buy a duplex, triplex, or even a fourplex using FHA loan or 3.5% down payment or 5% conventional loan, and buy a 2 or 3 or 4 unit. You're going to live on one side, rent out the other side, and let your tenant cover up to 90% of your mortgage payment for you every single month, while your whole house is still cash flowing for you. Here is a real example. I helped Cole to buy his fourplex in Houston, Texas for $680,000. He put 5% down payment, which is around $34,000. He live in 1 unit and rent out the other 3 units. So each of the 3 other units are renting for $1,400 every single month. And that is $4,200 rental income is collecting from the 3 units combined. His mortgage, property taxes, and insurance is $4,600 every single month. And because his tenants are paying $4,200, Cole is only coming to the pocket every single month with only $400 to live in his property. So you can see he's living almost for free, while his whole house is still cash flowing around $350 every single month on top of his fourplex income. And this is how you go from 1 property to multiple properties in as fast as 18 months. Now, if you are very aggressive and you want to do this every single month, you can go from 1 property in year 1 to 17 to 20 rental units in as little as 4 years. And this is assuming that you are repeating this strategy every single year. This is not an advice or a theory. This is a strategy I've helped people to implement multiple times, and I can help you to do the same if you're ready to take action. So now you are thinking, hey Wale, how do I actually qualify for my next property if I'm keeping my whole mortgage? And that takes me to the part that nobody is actually telling you. There are lenders loopholes that you can easily take advantage of if you think like an investor. Loophole number 1 is the rental income. The projected rental income from your current home will help you qualify for your next home. Lenders allow up to 75% of your projected rent that you're going to be collecting as an income to offset your current mortgage you're going to be getting. So assuming you're going to be renting your house for $2,000 per month, lender will credit you up to $1,500 for qualifying for your new mortgage. This is an absolute game changer that a lot of people are not even aware of. And loophole number 2 is the lease agreement. The lease agreement is actually a proof because most lenders only need you to have a signed lease agreement. It doesn't have to start immediately. It could start from 2 months, 3 months, 4 months after you already moved out of that property. But you must have a lease in place just as a way for them to see that you already rented out your property. Again, on paper, it doesn't have to be something that is already happening. It could be something that will happen in the future. Now, all you have to do is get someone to agree to lease your property at X amount, then sign a lease with them, then send that lease to your lender, and boom, you are qualified to buy your next home. And that takes me to my loophole number 3 when it comes to lending. It is the DSCR loan. Buying as an investment property, you can actually use a DSCR loan. The lender will qualify you based on the property cash flow and the income, not your personal income. I've helped countless of clients to actually do this a lot of time, and as a matter of fact, I have a client that is only making $60,000 per year, and he was able to buy a $500,000 duplex for rental property using a DSCR loan in Houston, Austin, Texas, just because the property cash flow and that's all the lender need. So as you can clearly see that rental income is not just money, it is your ticket to the next property. Now, let me be clear and brutally honest with you. This strategy is not for everyone. So if you fall into this category, you are better off selling your property than converting into a rental property. So don't convert your home into a rental property if you fall into this category. Number one, you hate managing tenants, you just cannot handle maintenance call or dealing with people in general. This is not for you. Number two, your home doesn't cash flow because if you rent it out, you are barely going to be able to pay your mortgage. Then you are going to be setting yourself up for failure and stress and nightmare. So please do not convert your home to rental. The number three people that should not convert their home is that if your property need major repairs and you don't have the money to fix the problem, or you just have a desire that I just don't want to fix it for any reason known to you, then don't convert your home to rental because you're just going to keep sinking money into that property because things will keep breaking on the tenant and tenant will keep calling you to come and fix it and you're going to get frustrated. Eventually, you still have to sell it. Maybe at that time, selling it at a loss. So if this is you, you are better off selling your property right now and take your money to something else. So the fourth category of people that should sell their property right now is if you are selling your property and it's going to give you a huge tax gain if you sell your home. You should definitely take advantage of that because under the IRS Section 121 exclusion, you could avoid capital gains of up to $250,000 if you are single and $500,000 if you are married. And that is a big equity cash out that nobody will say no to. So as you can see, sometimes selling and reinvesting the money could be a smarter choice for you depending on your situation, of course. And that is why you want to really know your number and make your decision accordingly. So turning your primary home into a rental property is one of the fastest ways you can build real wealth. I've seen clients use this strategy to go from one property to 3 or 4 property in as little as 1 year while still living in their dream home. So now the decision is yours. You can either sell your property and cash out $124,000 right now, or you wait a couple of more years and see how much you can actually accumulate in terms of appreciation and loan pay down and cash flow while you might still decide to sell it in the future. For example, the one I walk you through, you might delay the sales and still, increase the value of your house and total income generated by $145,000. And this is just on a $400,000 property. Imagine your house is $1 million or even more expensive house. You can do the maths. And while you keep your property, it doesn't mean you cannot buy the next one because you still have the freedom to buy the next property of your choice while you are not losing momentum and while you are not paying unnecessary capital gains to the IRS. And if you need my help to help you figure out whether you should sell your property or convert it to a rental property and how you can actually structure your next home purchase to maximize all the advantages and benefits, especially the lender's loophole, I want to help you. You can easily schedule a Zoom consultation on my calendar below. You will see the link to my calendar in the video description below. I'll be able to help you dissect your situation and give you an action plan you can follow. And I will not just be talking from theory. I will be showing you practical example. I will walk you through the number. I will walk you through your market and I will show you what your next move should look like. Thank you for watching till the end. Before you go, I want you to watch this next video where I walk you through how I manage my 30 rental unit that saved me a lot of time, saved me a lot of money and saved me back and forth with my tenants. In the video, I show you the exact tool I use to manage my 30 rental unit without losing my mind. Thank you so much and I will see you in the video. Peace.